I think most of our discussion has been about how we keep college accessible to students coming out of high school, how we get them into a higher education program. Today I realize that we also need to make graduate studies part of the discussion. If we're going to compete globally, we have to make sure that even that next degree is possible for young people who don't have the financial resources to fund it. So, these students were pretty persuasive today that graduate students do need to be part of this discussion, and I will make sure that they are when I get back. Well, the House of Representatives, their fix for the looming interest rate increase for student loans is to make it a variable loan that will float over the life of the loan. And I think many of us think that's a mistake. When a young person is taking out a loan to get a higher education, they want to be able to plan. What is that loan going to cost them? And I think if you don't know for sure what it's going to cost you, that might be a deterrent for some young people actually even agreeing to take out the loan. And we want to make sure that those loans are accessed and are accessible. And so I think the variable loan, and I heard that today from the students, that the variable loan is not a great idea. I don't think the Senate will support a variable loan rate, and that's where I think we'll have a significant place we're going to need to compromise between the two, the House and the Senate. Well, I will say one thing that didn't come up today, because these are all the University of Missouri students and this is not an issue here, but one of the things we have to look at is for the for-profit schools. They are pulling down a much larger percentage of the loan funds than the number of young people that are going to these institutions. And some of them are not providing a meaningful education. They're grabbing the benefit, whether it's a VA educational benefit or whether it's a Pell Grant. They're taking that benefit and they're really not delivering a product to those students. They certainly are not concerned with whether or not they're staying in school, whether or not they're employable when they finish, whether or not even that school is a good fit for them. So I think we're going to continue to look at more regulation and more oversight in the for-profit online higher education industry. If we could be more effective in overseeing that, I think we could pull more resources into some of the more traditional higher education institutions that would be more helpful. Well, I certainly understand that there is a difference, and I certainly understand that we might need to add to the proposal some basis points for administration. Certainly maybe a slight increase in that rate to embrace a default rate that might occur. But I think the principle is a sound one. If we are making it easy for financial institutions to access capital that belongs to the United States, we ought to try to make it as easy for students to access capital that belongs to the United States, especially since, for example, at the university, the default rate's only 4%. That's a very strong rate, and it's one that I think ought to give us pause about the kind of interest rates that are contemplated under the current scenario. Well, they're going to have more expensive loan payments. The increase in the rate would only apply to new loans. So everyone who has a student loan would be locked in at the rates they have now. It would mean that there would be a large group of students that would have higher student loan rates going forward, and that's what we're trying to avoid. It would require that people dig deeper in their pocket to pay more money back because of the interest rates, and we want to make sure that that is not something that keeps people away from college in this country and particularly in Missouri.